Hey guys, and welcome to the Working Money Channel. Bitcoin dead Google searches hit a new all-time high, guys, for this term, which means, yeah, the bottom is probably already in, or very, very close to being in at least. Sentiment in the crypto community is the lowest it has ever been, leading to a fresh speculation that BTC is a dying asset. So what's going on here? Collapsing Bitcoin prices are reviving renewed speculation about the demise of the leading cryptocurrency. According to Google search trends, Google searches for Bitcoin dead spiked in the week ending Friday, June the 18th, and likely reached the highest level on record. Well, of course, that is when we also saw Bitcoin take a dip all the way down to $20,000 per coin. If I bring up Bitcoin here on the daily, we can see that last week did see a huge fall. Of course, the Celsius fiasco also likely spurred that on a little bit, or if not in a large part. Google Trends tracks interest in the search terms over time, assigning scores of 1 to 100 based on the total number of user queries. The data is anonymous, categorized by topic, and aggregated based on location. So as you guys can see here, they're demonstrating the Google Trends. I actually just brought up here Google Trends myself for Bitcoin dead in the search term, and you guys can see a huge spike in the last week, 100 being the largest. And in some countries where that is the case, Canada, number one here at 100, followed by Australia at 82. Then we've got Nigeria, 78, United States at 74, and the United Kingdom also at 74. So these are the countries ranked. Canada in the number one spot. So a lot of pessimism coming out of Canada. Bitcoin price right now at $21,000 US, and we are seeing a bit of a rebound despite what Google Trends is finding. We are seeing a rebound coming out of there now. This is not to say we are entirely bullish yet. I still think that we are going to see some rough trading ahead, chopping sideways. We could even see price go even lower. In the rest of the market, following along, we got XRP here trading right now at 32.6. So a similar trend for the XRP chart. Up a little bit, but not by too much. So have you guys locked in your positions yet? Have you decided to buy the dip? Are you guys getting into other altcoins? Are you increasing your XRP position? I'm really interested to see what, how long you guys have been in the space and what you guys are deciding to do. Maybe you're fine with your position and maybe you're just hodling for now. But please do put it down in the comments, guys. I'm always interested to know. I should also mention, and I never mention this on this channel, I guess I feel like it's kind of obvious, but I do have a Twitter as well. If you guys want to follow me on Twitter, I am at WorkingMoneyCH on Twitter, and tag me in a tweet and let me know what you guys are doing. I'm interested because I think, depending on when you got into this market, you probably have a very different strategy if you got in 2020 and 2021, rather than if you've been in since 2017, 18, 19. So I'm curious because I've been in crypto since 2017. I know that, I was cost averaging down all throughout this time here. So my cost average is at about 22 cents per XRP. So right now, even, with this dip, I'm still up about 47.5% on my investment. And yeah, I know I was up 788%, but XRP did not reach my targets. And I'm sure like a lot of you guys, you feel like you probably didn't sell enough or did not sell at all. So, I'm not terribly concerned because I know this is a long-term play, but I am interested and I am wondering what you guys have been investing in. So comment on this video, or you can follow me, tag me over there on Twitter. This one, guys, coming from Michael. The Federal Reserve controls crypto and asset prices. I don't know if you heard this. This is another theory. So Anthony Pompliano had a speaker on his YouTube channel, Caleb Franzen, and he told viewers how the Federal Reserve controls asset prices. Here's what he said, okay, when asked about correlations between the broad spectrum of assets in the current economic environment, he said that yields and asset prices have an inverse correlation. With the Fed tightening monetary policy and Treasury yields moving higher, assets across the board are selling off. In that environment, we've seen asset prices across the board, whether they're looking at stocks or Bitcoin and crypto, or even treasuries in the bond market, everything is selling off, and that's a quote from him. Until we see a formal shift in yield environment, or in the yield environment, there will not be a bull market. This is what he added. Financial analysts are generally of the opinion that things will not improve for crypto markets until this macroeconomic monetary situation is under control, which means more rate hikes and a major fall in inflation. So that's an interesting perspective. This was Caleb, who was it? Caleb Franzen, who was on Anthony Pompliano's channel. I recently watched another interview with, who was it? It was Nick Carter on Anthony Pompliano's channel as well. And he actually said that when inflation rises even further, that is when we will actually see a spike in Bitcoin price. So a bit of a different perspective there. He was talking about a lot of things. The interview was over 50 minutes long. So a great interview if you guys didn't catch it. I don't have the link up here, but I figured I'd mention that considering this is someone else that Anthony Pompliano is interviewing. Since it is currently at a 4-decade high of 8.6%, this is unlikely to happen for many months despite the Fed's fiddling. It took around 18 months from the first time it topped the target of 2% to reach today's catastrophic levels. So no crypto spring yet, essentially. Comparing the current market conditions to the crypto bear market of 2018, the bottom was in December when the Fed formally paused its rate hikes. The move coincided with a massive slump in the stock markets in the same month. Similar crashes occurred in March 2020 when the Fed said that it would provide infinite support to the monetary and financial system. Conversely, crypto markets peaked in November of 2021 when the Fed announced that they were tapering. It's a super simple and crude metric for which asset prices are going to go going forward, but it's been super accurate in this monetary wonderland that we are in. So an interesting perspective here, and different perspectives. A lot are saying crypto is still correlated with traditional assets. Before it wasn't. In the early days, Bitcoin was not correlated at all. And now it is more than ever. But I think that's going to shift yet again. If we do see more inflation, which it is inevitable that it is going to happen, a lot of these analysts, even not talking about it in the context of cryptocurrency, are saying that we are going to see massive inflation over the coming years. They all say the same thing. If you think this is bad, just wait for, another year, 2, 3 years down the road. And I think at that point, once people are squeezed so much and realize that they can hedge themselves with cryptocurrency, I think we could actually see crypto start taking off once inflation continues to get worse. And so whether that is, within the next few months, inflation is constantly getting worse. So I guess what is that point, that critical point, where we see it get so bad that people start piling in to Bitcoin and other digital assets, and then we take off from there. So another perspective here, wanted to thank Michael for posting that. With regards to Ripple XRP news, Ripple investor SBI Holdings and Standard Chartered have now partnered for Digital Assets Inc. So check this out, guys. Two of the most prolific enterprise investors in blockchain and digital assets, Standard Chartered and SBI Holdings, are collaborating on building a digital asset ecosystem. Last month, there was a formal announcement about the fintech collaboration between the bank's Singapore subsidiary, SC Ventures, and SBI to work together to create ecosystems of startups. The sectors included were internet, technology, fintech, artificial intelligence, and big data, blockchain, and crypto assets. In an investor presentation today, SBI said the collaboration includes the UK group headquarters of Standard Chartered, who was indeed one of the early investors in Ripple, and would cover BaaS-related blockchain as a service business and digital asset fields, including DeFi, Metaverse, Web3, etc., in Southeast Asia, the Middle East, and Africa. And so during the same presentation, SBI also mentioned a digital assets custody joint venture between a global UK enterprise and two SBI subsidiaries, SBI Digital Asset Holdings and crypto exchange SBI VC Trade. Standard Chartered currently owns 95% of UK-regulated digital asset custodian Zodia. When we asked Standard Chartered to confirm whether this deal is with Zodia, they declined to comment at the time. So big players, guys. Standard Chartered, of course, one of the first major VC capital firms that helped fund Ripple getting off the ground, and SBI Holdings now, one of the biggest Ripple partners to date. So big things are brewing. Wanted to thank the Wrath of Kahneman for posting that. He also mentions down here previously in May, SC Ventures, Standard Chartered Ventures, Singapore, signed an MOU with SBI Holdings, which was mentioned in that article. And he also mentions the Zodia point here if you need it. Note that they were also equipped to route assets to and through green mining pools as well. So all sounds very on brand with what Ripple and XRP are working towards with all their partnerships globally and their connections at the highest level. Wanted to thank the Wrath of Kahneman for posting that. I got some Algorand news too, guys. Algorand blockchain now integrated with the Taurus platform. So just a little bit about Taurus. It was founded in 2018 in Geneva, Switzerland, specializing in digital assets and blockchain. Taurus was founded by senior executives with a background in banking, regulatory, IT, and cybersecurity. Taurus delivers its clients the infrastructure to manage any new digital asset, including cryptocurrencies, tokenized assets, and digital currencies in one unified platform. And now they are integrating with the Algorand blockchain, guys. Taurus Protect, the #1 custody platform for banks, has fully integrated with the Algorand blockchain. It now supports Algo native token, so the Algo token, Algo staking capabilities, and SAS Algorand standard assets. Taurus's clients will be able to use Algorand to generate passive yield by collecting staking rewards, as well as issuing and managing tokenized assets leveraging ASA. And just real quick, a quote down here: "It is great to see Taurus, an industry-leading digital assets platform, now integrated with the Algorand blockchain," said Pietro Glassano, Business Solutions Director for Europe at Algorand. "This is an exciting new venture for financial institutions to access all that Algorand's Layer 1 has to offer, from speed and scalability to security and the lowest possible environmental impact." So, again, focusing on the quick and efficiency of the blockchain as well. All things that, of course, are first and foremost when integrating at an enterprise level. And Ripple with the XRPL, they have proved that already. Now we're seeing other players like Algorand enter the space at a higher level. So another project that I think is going to have value down the road. This, again, is one of the positions that I am going to be looking at, guys. On the Algorand chart, Algo's up a little bit right now at about 33 cents. But I'm still not getting into more positions quite yet. I will let you know what and when I get in and at what price. Also wanted to mention this, guys. Yassine Mubarak here posting this with regards to the SEC lawsuit. So an interesting perspective here. The SEC could have gone after any crypto project. Remember, they said most crypto tokens, thousands of them, were securities. We should thank our lucky stars that the SEC chose Ripple to go after. Why is this? I mean, that sounds counterintuitive, doesn't it? He goes on to say, because Ripple is very well resourced and can afford to take on this fight, and I think this is the crux of this argument here. It's led by one of the most professional teams in the industry. They have the best interest of XRP and its community at heart. They always try to comply with regulations and the law. Had the SEC gone after any other project, I'm not sure the fight would have been as hard as it is for them now, and an SEC win in such a case would spell disaster for the whole crypto industry. So despite the fact that, okay, here it is. We're martyrs. At this point in time, XRP hodlers are going through probably, I'd say arguably the most pain right now. Because of this lawsuit, we did not reach our all-time highs that were set back in early 2018. You know, XRP did go up roughly to about $1.96, just above the 0.5 on the Fibonacci, but now it's coming back down all the way back to about 33 cents. So we are feeling this pain, but short-term pain, guys, for long-term gain. If it was any other company, think about it. We could be set back even further. Because in an alternate universe, if it was another company and they did not have the resources like Ripple, well, I mean, the lawsuit could have effectively been a slam dunk for the SEC, and from that point forward, crypto regulations would maybe take precedent from that theoretical lawsuit. So, we should be happy. I see what Yassine is saying here. Despite the pain, we are in a good spot. To that point, I mean, the SEC has been floundering the entire time. From Bill, guys, at Belisarius 2020. One interesting point LBRY makes. So, you know, the SEC took LBRY to court as well. One interesting point that they make in their opposition to the SEC's summary judgment motion is that the Howie test is transaction specific, and the SEC has recognized this to be so. They cite Hinman's Ethereum free pass speech in support of that argument. Nice touch. So this is the point that Bill's just pointing out here, as both the Supreme Court and the Commission itself has recognized the Howie test is transaction specific. And the determination that an instrument is a security at one point in time does not dictate that the instrument will constitute a security for all eternity if circumstances surrounding the offer or sale of the instrument change. So basically, tokens can change, and this is what they mention here. Despite the fact that the SEC knows this, they now recently told the court that SEC attorneys gave Hinman legal advice to ensure his speech was consistent with the SEC's understanding of the application of the Howie test to digital assets. They argue in the Ripple case that XRP, even in the secondary markets, is a security, and that Ripple has made one continuous offering of XRP, apparently not transaction specific, for years and still going. You can't make this stuff up. And he tags John Deaton, Fred Rispoli here, and attorney Jeremy Hogan as well in here. Here's a specific example of LBRY objecting to the SEC's attempt to characterize specific offerings or sales of LBC as a continuous offering and drawing attention to the separate transactions. The SEC needs to argue a single continuous offering, both to support its assertion that cryptos are securities per se, and to try to convince the court that there is a common enterprise that extends to secondary markets and all investors. And so here's just the point that he's mentioning. Disputed to the extent the commission suggests that LBRY was engaged in a continuous sale of LBC over a several month-long period. To the contrary, LBRY made 4 discrete sales of LBC to Flipside Crypto. So, another indication here, they can't stay on track even with their own arguments. Consider this too, guys, from Wheezy at Nerd Nation Unboxed. This is Nancy Wojtas giving more details on that secret meeting with the SEC. Listen to what she had to say.
And finally, in December, the chairman came out and said, look, I have not seen a token offering that was not a securities offering. And at that point in time, we stopped all of our clients from doing, well, we either told them to stop or we disengaged with them because we weren't going to be a party to a securities offering without proper registration. And, it kind of put everything on hold in that arena. The chairman came out to the Rock Center at Stanford, gave a speech, said, look, market professionals, we're watching you. And Andreessen Horowitz, I give them credit, they reached out to the chairman, they had a private meeting with him, and the chairman told them, look, form a small industry group, make suggestions to us how we can rationalize the securities laws with, what's happening in the token arena. So there's a small group, Andreessen Horowitz, Union Square Ventures, there were 3 law firms, Cooley, Perkins Coie, McDermott, Will and Emery, 2 educators, Joe Grenfest, who's a former commissioner, who's now at Stanford. We had somebody from Berkeley, and then we had NVCA. So we put together a safe harbor proposal where we, again, tranched each kind of segment and figured out how the securities laws would apply to each of those segments. The last one being fully decentralized network. It doesn't make sense that the securities laws would have any, application to that type of a network, like Bitcoin or Ether. And at the time in December, the chairman was saying Bitcoin was a security. So we had a lot to teach the SEC. So we submitted that safe harbor to them in March. We met with them. We met with congressional members. We met with Department of Treasury, the CFTC.
The clip ends there. So it sounds like, at every turn, these lawyers and, respected bodies who understand cryptocurrency were trying to show the SEC, look, this is very different than what you're used to handling, and here's a safe harbor, and, we can go through this, and we can create a framework, and yet by December 2020, they still end up suing Ripple. It continues on down here, guys. The Amy she's talking about is Amy Starr, again from Nerd Nation Unboxed. Listen to this.
The SEC told us, look, we're the government. It's going to take years before we get to a safe harbor. What we suggest you do is start submitting no action proposals to us, which a no action letter is something you describe the facts, you provide the legal analysis, and the SEC will say either we won't recommend that we go to enforcement with you, or they'll say you should withdraw this because we're really not going to be issuing that no enforcement comfort to you. So we put together a letter, we submitted it to them in draft form on October 1. We met with them yesterday. It was like talking to Amy. It solicited a lot of information out of us. They wanted us to explain it to them because our sense was they had not read the letter. And Amy was not, providing you any information. Neither did the SEC. And other than to communicate once again that They don't buy into anything other than a full securities law application to any type of a token offering. They view Bitcoin and Ether as being really very different. So
basically stating the SEC wanted to remain ignorant, stubborn, however you want to put it. They see these as securities, and that just goes along the lines of them wanting the turf over cryptocurrencies, not viewing them as commodities, but as securities, and it's a turf war. So there's that school of thinking as well. Anyway, wanted to thank Nerd Nation Unboxed just for providing those clips, giving us some more insight, because when we see these inconsistencies, at first I feel like it was kind of funny, comical that the SEC was making so many missteps, and we're all like, yes, this means that the clarity is coming very, very soon. At this point, it's getting so ridiculous that it's infuriating. On top of that, the SEC deciding to drag this case on, it doesn't make me happy. John Deaton here saying, this is why I filed the writ versus SEC. The SEC is supposed to claim a specific transaction on a specific day equaled an offer and sale of a security. Instead, it alleged every sale from the beginning until today is a security. That was the second indication the lawsuit was a weapon. Retweeting out Bill's original tweet that I mentioned earlier on. So, weaponizing the lawsuit clearly cannot stay consistent on the fact that securities can indeed change over time. At one point, it may have been a security, but once in a decentralized ecosystem, that definition can in fact change. As they've even mentioned, the price of XRP probably lower than it would have been had this SEC lawsuit not taken place. But the good news, guys, it's still following the trend of spec markets. XRP is not dead. The partnerships are continuing to be forged worldwide, and it's only a matter of time before the US experiences the same clarity that they're experiencing in the rest of the world. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.